So you don't need to worry about, will the market go up over time? As long as the central banks keep printing money and this technology gets adopted, you'll be fine as long as you're adhering to not being too far out the risk curve. Simply, it's the same advice to everybody who comes into the space. Just buy Bitcoin. And dollar cost average, so buy some with your paycheck and hold it and get a feel for it. One thing I do know is crypto has a superpower. Behavioral incentives of tokens. And in AI, you might get a nice job. It's not clear whose equity is going to be worth anything. But tokens are fast to accrue value. And as the market starts pushing higher in the phase 2 of the banana zone, they'll come.
Raoul Pal kicks things off with a hard truth. The toughest part of crypto isn't understanding charts or picking winners. It's keeping your sanity. For most newcomers, the emotional rollercoaster of crypto can be brutal. One moment, they're on top of the world, convinced generational wealth is inevitable. The next, they're crushed by corrections, blaming everything from Trump tariffs to looming recessions. But Raoul makes it clear that's all just noise. The real driver? Liquidity cycles. And without understanding how they move markets, you're just guessing. If this resonates, take a second to smash the like button, subscribe, and turn on notifications so you don't miss future insights like this. We dive deep into crypto trends, digital assets, and macro market strategy every week. Drop your thoughts in the comments. We love hearing from the community. Every bit of engagement helps us grow and keeps the content coming. Let's go back to the interview.
I've tried to explain to people, this space is long term. The hardest thing to do is not lose your shit. Every newbie who comes in loses their shit. You tell them, hey, listen, because of the tightening of financial conditions last year, the market's going to start weak. They're like, yeah. When it happens, it's like, oh my God, what's happening? I'm like, I told you, the market should be weak because of financial conditions. Another week later, what's going on? Nothing. The market's going to be tight. And then they start assigning narratives to it. And everyone starts to, and that's why I try and be flippant on the podcast to get people to understand that what they're doing is building narratives to describe why the price action is, and it may not be the accurate narrative. So it's like suddenly they go from, oh my God, we're all going to be rich, to Trump's ruined everything, tariffs are going to destroy the world's going to go into recession, this is the worst thing ever. Maybe it's not that. Maybe it's as simple as the flow of liquidity into markets, and over time, crypto gets adoption. So that's why I try and just lighten it up, because I know we've talked about this before. All of our life savings are in this, right? It matters massively. And I get that. So I'm not flippant about that. What I'm trying to do is get people to relax and understand there are ways to do this, the don't fuck this up thesis that we've talked about on this podcast before, just ways of not worrying about it. Simply, it's the same advice to everybody who comes into the space. Just buy Bitcoin. And dollar cost average, so buy some with your paycheck and hold it and get a feel for it. And everybody I've taken down that journey, at first they do that. You're usually giving them that advice when the market's going up. Then they have the correction. They have to learn, oh my God, it can go down 40% as well. Am I going to lose all my money? They have to go through all of this. But that's the learning curve. And then after a while, they get used to the volatility and they become numb to it. And then you can say, okay, have you listened to podcasts? Have you done research? Have you been on Twitter? Not to listen to trading stuff, but just to understand what is this technology. Because Bitcoin is just a part of the space. It's the digital gold, the store of value. But then people they want to get more speculative in the space. They want to try and make money. So then you start saying, okay, listen, only use the top 3 or 4 projects. So you don't need to worry about, will the market go up over time? As long as the central banks keep printing money and this technology gets adopted, you'll be fine as long as you're adhering to not being too far out the risk curve. And then you need to be paranoid about every single other part. Because don't forget, in the end, we go back to the point I made earlier, everybody's life savings is in this. This is the single most important thing for most people in their financial lives. And there are so many ways you fuck it up by getting a little bit greedy. Does the 6% yield actually matter to you? Oh, but it gives me cash flow. If I'm 6%, you get 6% and there's a percentage chance of losing all of your money, and you don't know what that percentage chance are, Now, that's not the case with all DeFi or anything else, but it's just that people end up doing dumb shit. This space is so full of risks. You have to be paranoid at all moments. Because before you know it, you're like, well, I'm buying and holding, so I want to get some yield.
Next one I wanted to ask, yeah.
And then you're on some DeFi protocol that's giving you yield and something goes wrong, goes to zero immediately. Okay, that is a classic one that happens endlessly. Or you expose your wallet and get hacked. And people don't understand wallet hygiene and how to keep things in different wallets and never expose your key wallets to things, always have a step in the middle, the custody side of stuff. There's so many ways you can get hacked. There's people impersonating me online or you online, trying to get your wallet, or impersonating Coinbase online. Everybody's after your money. And you have to be paranoid at all points. I'm massively overweight, Sui.
Oversold.
Massively.
Can I ask you, percentages wise, more or less?
I'm definitely over 70% Sui. And that's not anything to do with the foundation that I'm on. That's my just capital allocation of my savings. And simple. It's not because I'm on the foundation and people are like, hey, he's just shilling his coin. It's because the fucking chart of Solana, Sui versus Solana broke out. And Solana was the strongest horse in the race. So if another large token is outperforming Solana on like weekly charts, daily charts, significant time horizons, and the chart pattern looks good, and you can see the adoption, and it's got a lower free float, and there's large demand, and there's a lot of developer activity, and all of the things we talked about, then I'm forced to do that. I then also looked at anything versus Sui now, because that's now your benchmark.
Yeah.
And then what's funny is you see, well, there's one token that's doing really well versus it. Deepbook. And Deepbook is the liquidity layer Sui, so I own some of that too. And I hadn't really thought that through, but he said, look, I don't see developer growth growing fast enough. But, one thing I do know is crypto has a superpower. Behavioral incentives of tokens. And in AI, you might get a nice job. It's not clear whose equity is going to be worth anything. But tokens are fast to accrue value. And as the market starts pushing higher in the phase 2 of the banana zone, they'll come. So I'm not overly concerned by it.
Raoul shares a powerful personal story, one that cuts through the noise of market hype and price predictions. After cashing out some crypto gains, he bought a modest home in Spain. Nothing flashy, but it was paid in full. And in that moment, he had a realization. I won the game of life. With a roof over his head and zero debt, he knew he could weather any storm, even working a bar job if he had to. That freedom? It wasn't about Lambos or moonshots, it was about financial independence on his own terms. His message is clear. Don't just chase returns. Convert digital wealth into real-world assets. You don't need a seed phrase for a house, and no one can hack it or steal it from your cold wallet. If this inspired you, comment, and subscribe for more real-world wisdom from the world of crypto. And be sure to check out our other videos for deeper dives into financial freedom and digital asset strategy. Let's go back to the video.
What I do know is by him doing what he's doing, he's creating leverage in the system. So he's basically, via the convert, selling cheap options. They're being bought by option arbitrageurs, and who are then laying off the option risk on exchange, whether it's against Bitcoin or whether it's against MicroStrategy's listed options themselves. But also, they're trading the NAV versus Bitcoin, which moves around, and that's feeding also within it the perps versus spot, the futures versus spot, all of the arbitrage in the system. And arbitrage uses a lot of leverage because you're making smaller returns and they use leverage to enhance the returns. It seems right now that most of the buyers of the converts are TradFi hedge funds and others. So there's people like Norges Bank who are a sovereign wealth. They buy it for just the Bitcoin element of it. But then there's a bunch of Citadel and Millennium and Point72 and all these giant hedge funds, and they're doing the arbitrage. These guys understand risk very well, and they're probably systemically backstopped as well. And their position's not big enough to blow them up. It's who else is going to take the risk further out the curve that blows up. This market always blows up from leverage every time. It's so right hard. And it's a function of where you are in the cycle, you want to de-risk a bit earlier than you feel comfortable doing,
Yeah.
because then the back end of the cycle can play out short or long. It doesn't matter. But you need to have enough wealth that you're feeling a little bit hubristic, like, oh, I king shit. That's when you take some money off. As soon as you start thinking, well, if I just double it again, I'm going to be really, just take some money off. We've not got there yet for me. So, another larger move in the cycle, I'll then take some money off, and it'll feel too early, and I'll hate doing it, and I'll regret doing it, but I know it'll be the right thing.
You regret doing it until you don't regret it because it went so high and then it went back so low that you're like, I did the right thing.
Yeah, I mean,
you're always gonna feel bad, right? That's
like,
the rule. You're always gonna.
You should feel bad.
Yeah.
You're not going to time the top perfectly. And the thing is let's say you're buying a house with the proceeds. You've done well, you buy a house. Nobody can take it away from you. Right? That's an asset that you don't have the fear of somebody stealing your wallet, getting your seed phrase. You don't have a fear of putting it in DeFi. The bricks and mortar are yours. You own it. You've got a house over your head. You've got an asset that's long term. That is an incredible thing. And so people just need to do that. And that de-risks your whole life. Because then basically it's when I bought my first house, it was a house in Spain. It was a holiday home. And I bought it in cash. And I realized I won the game. And it wasn't an expensive house. But I realized I could have a bar job in Spain and live in that house. And nobody could take it away from me. And I was like, I won the game of life. There's too many coins. And it's a game of attention. So the more coins there are, the less attention can focus on the key ones, or it hyper focuses on the big ones, or a narrative holds for a period of time and it doesn't hold for long in this world. So if you look at what's happened in the last 3 years over the bull market from the bottom of 2022 through to today, it's essentially been a Bitcoin dominance game. So just owning Bitcoin has been the best bet, except for 2 asset allocation shifts, basically, that have been relatively long-term for a year each. One was by Solana at the bottom, and the other was by Sui last year. And those have been the big bets. There's been interim bets where you've made a lot of money from some of these, but they've been less persistent. So they haven't captured attention for long. So some of them have lasted 6 months. But really what you're looking at is in the top 10, top 20 projects, what are the ones that have persistent network adoption that are growing and provable? Those are better quality bets.
Raoul reflects on a key issue in the crypto space, the problem of excess choice. With thousands of coins out there, most investors get lost in the noise. The truth: there's not enough collective attention to go around. In every bull market, the vast majority of gains concentrate into a small group of clear winners. Since 2020, we've seen that play out with Bitcoin, Solana, and, more recently, Sui. These aren't just hype-driven pumps, they've shown real network growth and sustained adoption. So what's the smart strategy? Focus on the top 10 to 20 projects. Follow clear adoption trends. Manage your risk like a professional. Everything else? It's just noise. If you're serious about cutting through the hype and building long-term gains, smash that like button, subscribe, and turn on notifications. And don't stop here, check out our next video, where we break down the exact metrics to watch when evaluating crypto projects. It could be the edge you need heading into the next bull cycle. See you on next video.